Okay. Welcome to EMS Grade 8. In this video, we want to look at a past exam paper, and we are going to look at a question 2.2 on that past exam paper. And this question is on accounting question, and it reads, Audrey started on mobile beauty business in December 2019. She is contracted by large firms to make weekly pamper visits for all their staff. Audrey has two therapists that she employs on a part-time basis for one call out per week. Use information provided below to analyze the transaction according to the accounting question. We are given uh, some transactions for December 2019, which you need to go through. And then beneath that, you are given the other section whereby you are given effect on accounting equation. So we put columns that are given there, obviously, on the numbers column. We are going to put our numbers that are given first there. And then we also have the journal part where we are going to indicate the subsidiary book that we are checking information of each and every transaction. Then we know that the accounting equation, the elements of accounting equation, we've got assets, we've got owner's equity, we've got liabilities. But according to this question, we are only going to look at effect on assets and then owner's equity. So we are going to first identify the double entry involved in each transaction. And then from there, we can be able to see what effect is it causing to the assets and then owner's equity. So if you go to the first transaction, it is paid for petrol for the month, which is 1,000 rands. So first of all, let's try to identify two accounts that are involved. Remember, every transaction has got an effect on two accounts. So first of all is to identify the two accounts that are involved and try to see which one is being debited, which one is being credited. Then from there, you can now deduce what effect is it causing on assets, what effect is causing on others. So on the first transaction, we are saying we are paying for petrol. So obviously, there's bank that is involved. And then obviously we have an expense account there of petrol. So we are saying expense and petrol in particular. So these are the two accounts that are involved. Then we can try to identify which one is being debited, which one is being credited. Then from there we can see, right? We've got bank, and we're seeing that it's money that is being paid. So bank is the giver there. Remember, we credit the giver, so we credit there. Since money is going out of the business, so we are crediting. And then for the expense, obviously, we are going to charge this expense in the profit and loss account, but in this case, an expense obviously has got a normal debit balance. We're not going to debit. Remember, for every transaction, every debit entry has got a corresponding credit entry, and every credit entry has got a corresponding debit entry. We don't debit and debit or credit and credit in one transaction. When you debit, you're supposed to, the corresponding entry that you make, you're going to credit. So this is what we have. So it means that this other account automatically becomes a what? A debit. But we know that expense account normally debited. Then this is what we have. Then from there now, we try to identify each and every element of this double entry. What is it affecting in terms of assets and owner's equity? We are seeing that we have got the bank, and the bank is an asset. And we're also having an expense. What effect is it having here? It is having an effect on owner's equity. Remember, expense is charged in the profit and loss account. And the profit and loss account is used to calculate the net profit, which is also going to, if you find the net profit, is going to increase the figure for owner's equity. So the effect that expense has on in the profit and loss is to decrease the profit, which automatically means it's going to decrease the owner's equity balance. So obviously, this one is an effect on owner's equity. Then we come back to this when we are now filling. So we can try to fill as the first row that we have there. Let's just try to see. So if you come here, you'd see that all the number column, we're going to put our 4, which is here. And then the journal, obviously, is a payment taking place, paid for petrol. So it's a payment. So it's going to be the cash payment journal. We'll take the information from the cash payment journal. Then all the assets, we are crediting an asset. What effect is it? We are going to credit our bank. So we can just say bank is credited. Bank is credited. Then the reason why the reason of banking of crediting bank is that is because we want to decrease the assets. So the reason is that assets decreases. Assets decreases. Because as we are paying with money, as we are paying the petrol with money, it means our bank balance is going to decrease, and that's the reason why we are doing that. So that what we have on the on effect on assets. Then we go to owner's equity. We're saying we have expenses as owner's equity. So effect that we have there is debited expense account. Remember, petrol account is an expense account, and then the reason which we are having there is there's a decrease in owner's equity. A decrease in owner's equity. So this is what we have on the transaction report. Then we move on to the next one, which is on the 10th. So let's just try to see what we have on the 10th. Right here, we have got our 10th. So we can just indicate here 10. And then first column is journal. Let's read the transaction. Received 1,200 rands for services and board attorneys. So we are receiving. So obviously, our journal is going to be cash receipts journal. And then we can try to see in terms of the two accounts that are involved. And then we can be able to see what effect on the accounting equation. So we are saying two accounts involved, received 1,200 for services and board attorneys. So obviously, we are going to have bank. Obviously, this money is going to be banked, and then the other account that we are going to have there, it's an income account, since we have seen the money. And then as we are receiving, money is going to be banked, so bank is going to be the receiver there. So we debit our bank, and then we credit our income account. All income accounts has got a normal credit balance, so we credit income account, and then we try to identify bank, what is it part in terms of the account equation. We see that bank is an asset, and income has an effect on owner's equity. Remember, when we are in the income statement, the income is going to increase the figure for net profit, and obviously it's also going to increase the figure for our owner's equity. So the effect that income has on the account equation is it's on owner's equity. So we've got owner's equity, and then I will try to see. Remember, all assets. I think that's another tip that we can take note of. When we have our asset account, when we debit, remember this is debit side. When we debit, it's a plus, it's a plus or an increase. When you credit, it's a minus or a decrease. So basically here we are debiting. So we see that we are debiting here. So it's going to be a plus, which is an increase. So we come here. So bank is debited on the effect. We are saying bank is debited. Then on the reason there is that assets increase. Right. So we look at owner's equity. If this is income, and we are saying income increases our net profit. So we are saying on owner's equity is credited. So owner's equity, when it's increasing, it will be added on the credit side, like what we are doing here. So we are having owner's equity is credited. Owner's equity is credited. Reason, income is increased. Income is increased. So this is the second one. And then we go to the third one. Third transaction that we have is 22. Then paid wages for the week. Each therapist earns 500 rands a week. So let's try to identify again 2 accounts involved so that we can be able to solve the transaction that we have. So what we are saying is paid wages for the week, each therapist earns. So it's a payment that is taking place. So obviously we have bank and we have an expense account in the form of wages. An expense account in the form of wages. And we are trying to identify bank. Obviously, we now know that it's an asset. Expense is going to affect our owner's equity. And then we are saying in terms of our bank, what are we doing? We are paying. So obviously, we are going to credit, and then we debit our expense. So in terms of our effect now, we go to our account equation to try to see how are we going to adjust that. So here we are now here. We are saying this transpired on 22, and we are saying we are paying. So it's cash payments journal. And all the effects on assets, we are saying bank is credited. Then the reason there is that assets are decreased. Then we go to owner's equity and expense, we need to reduce the owner's equity. And we know that owner's equity is debited. Owner's equity is debited. So we are saying owner's equity is debited. And on the reason we are saying is the decrease of owner's equity. Then we go to the next one, which is going to be our last. Trying to see what we have there. So on the last one is saying bought consumables in brackets exfoliator, soap and cream to use while rendering the services, 384 rands. So obviously the first step is to identify the double entry involved with bought consumables. And we know that we have money going out, so bank is going to be credited. And we are going to have an expense which is coming in the form of consumables. So we have bank. We have our bank, and then we have our expense in the form of our consumables. So we check there, we see that we are going to pay some amounts there which are supposed to credit the bank. Bank is going to be credited, so obviously we indicate our bank as a credit. And then our debit, our expense obviously is going to be debited. So we see that now we have the 2 accounts, and no one which one is going to credit, which one is going to be credited, which one is going to be debited. So on bank, we are just going to indicate as such as a credit. So we are saying what the date is 28, and we are paying, so it's a cash payment journal, and bank is credited. And then what the reason assets decrease. And then we go to owner's equity. We know that it's going to be debited. And we are going to debit, so it's going to decrease the owner's equity. Reasons, expenses has increased. We're saying our consumables are part of our expense. So this is what we have, guys, in terms of the last transaction that we have according to this video. So let's stay tuned for more videos to come. Those who haven't subscribed, please subscribe and share. Let's share the link to our colleagues who are doing grade 8 EMS. More videos are going to come as we prepare for final exam. As for this video, I'm out. Let's meet again in the next video.